What's going on, guys? It's Jeffrey back with another video, and today we are going to talk about how to place your entries and exits in the Forex markets. And this has been a pretty hot topic, just in terms of like messages I've gotten on Facebook and Instagram as far as what people are looking for. And a lot of you guys are just starting out and, relatively new to Forex. So you immediately assume that you have to know how to place your entries and exits. And that's not always the case, but regardless of that, you still have to learn at some point to, how to enter and how you're going to exit the market. But I think when you're starting out, the most important thing for you to do is start on a demo account, first of all, and make sure that you're developing your mindset, right? You need to be able to trust the setups that you're taking and be able to trust the things that you see in the marketplace for you to act on it with real money. And the only way you're going to get to that point of that level of confidence is by you practicing, on a demo account, go and back test your charts, study all that. So with that being said, let's go ahead and get into the video and talk about placing your entries. So just stick around to the end of the video, guys. I am going to go into the charts and actually show you examples of all this stuff, but this is for the people that take notes out there. I want to make sure that you have some type of like slide presentation for you to go and write down to look back in the future on whenever you're if you're looking to enter a trade, you should go look at your notes from any of my videos on entries, and you're going to basically be looking for those things in the charts. So when you're placing your entries, once again, I've said this in pretty much every video I've talked about, you always want to start with a higher time frame analysis, right? So if you're placing an entry, you're going to be looking to base that entry off of a higher time frame key level, right? So that basically means you're looking to frame your trade off of a higher time frame support or resistance level. And I consider a higher time frame basically an H4 and above. So 4-hour, daily, weekly, monthly, all that stuff I consider higher time frame. Keep in mind, if you're on a monthly or weekly or even a daily time frame, the trades that you could potentially see unfolding do take a little bit longer to unfold than if you're trading on an hourly time frame. That trade is more likely to hit your take profit within a few hours versus a few days if you're trading off a daily time frame. So second step to placing your entries, after you've gotten the level of support or resistance hit on a higher time frame. So you're looking for a level of support to be hit. That level of support was now hit. You're not looking to enter right off the bat. You need to wait for a break in market structure to confirm that. If you're looking for a level of support, then you're going to be looking for bullish market structure, right? So you need to look for higher highs and higher lows forming. Once you get a higher high, basically, that is going to be a break in market structure, but you're looking for this on a lower time frame, right? So that's a H1, 15-minute, 5-minute. Typically, I like to see my break in market structure on an hourly time frame and drop in and enter on the 15 or 5-minute time frame. I pretty much never use the 1-minute time frame for entries. Some people do, but for me, my personal favorite is the 15-minute. I like to enter off the 15-minute, but sometimes you can get a good setup on a 5-minute with a very small stop loss. And so the third step is using fibs for your retracement entries. So, for the best possible retracement entry. So anytime the market basically made that higher high and broke market structure, after hitting that key level of support, we can pull our fibs on that swing, and we're going to expect the market to retrace into one of our fib levels to confirm, or not really to confirm, but basically to get confluence, which basically just means multiple things lining up. We would basically look for a retracement level to line up with the break in market structure. So I'll show you guys examples in the chart as well, but just keep in mind that these are at very minimum the top 3 things that you should be looking for before you enter the market. So let's go ahead and talk about placing your take profits or your exits. So anytime that I'm placing my take profit levels, I'm going to be setting basically multiple targets. And the reason that I do this is to pretty much stay profitable, and in case the market, decides to reverse and come back the other direction, then I've already locked in some profit. So I'm targeting all previous, so in this example, we've been talking about a potential buy, right? Where it traded into a level of support, then we got a break in market structure, and we entered using our fibs on that break in market structure. So I'm going to be targeting basically the next swing high on the H1 time frame. So that may be, typically I like to at least look for minimum 20 pips. So if the next swing high is about 20 pips, cool, that's going to be my first target. So once we get up there, then I'll take a portion of my trade off and move my stop loss to either a reasonable, lower risk level, or it'll be at break even, just depending on, what price action is telling us. So I'll sometimes, aim for, a daily objective if I'm entering a trade off the hourly time frame. It just really depends on, is the market trending? Is it consolidating? What's the market doing? Because then I'll have a better understanding of, whether or not it's going to be a big move, or it could just be a 20, 30 pip move versus an 80 to 100 pip move. So use your fibs for confluence of target levels. Again, I'm going to show you guys an example in the charts, but basically you can use your fib levels to line up with your targets. So that may come in line with a swing high, that may come in line with so the old swing highs will also be previous levels of resistance, because it formed a high more than likely at a level of resistance, and that's what we would be targeting. Now if we break above that level of resistance, we'd look for the next level of resistance, and then so forth. Alright, so step number 3 for placing your exits is going to be base your exits off the same time frame. That's a typo. Base your exits off the same time frame as your trade setup. So what that means is basically what I was just explaining in step 2. If you have, the next swing high that's above you, say it's 20 pips on an hourly time frame. Well, if I entered off of, an hourly support level that was traded to, and then we got a break in market structure on the hourly, my targets are going to be set on the hourly time frame as well, because my whole trade is framed around the hourly time frame, right? So by doing that, you're allowing yourself not to get caught up in any type of reversal or anything like that. So if you're, just for example, you enter a trade you framed the whole trade setup on an hourly time frame, entered on a 15-minute, but you're targeting weekly, a weekly high, and that's 100% possible. But you have to start, small, and at least start by just targeting the nearest levels, from the time frame that you framed your trade off of. Because a lot of times you'll see whenever the market's consolidating, like we had this week, this is the best way to trade. Just look for 20 pips, hop out, get back in, when you see another 20 pip setup, and that's it, call it a day. So I hope this helped you guys. I know it's very simple, but at the end of the day, trading is very simple. It's just overcomplicated by our thoughts and, certain things that we think, and fear and greed, all of it. It all plays a part on your trading. So at the end of the day, it is very simple. You just have to be patient, put in the time, study your charts, all of that, and then you apply these little key things that basically you're learning, and that's it. Then you will then be a trader. You're a trader now, but then you'll be, more one step closer to a professional trader. Let's say that. So let's go ahead and find some examples in the charts now. Let me exit out of this, minimize. Okay. So I wanted to show you guys this chart. This is USD JPY, and this is on a daily time frame. So let me actually, that way we can go over this together. Alright, so placing your entries. Always go based off a higher time frame level. So here we're on a daily time frame, and I've got this higher time frame level marked out. This is going to be example 1. Okay? Alright, so this up candle before this push down is considered an ICT bullish order block, which is a level of resistance, right? So once we traded below it, right here, this was now confirmed as a resistance level. So any point of trading back into that should hold as resistance. What would basically like not confirm that anymore is breaking above this high here. Okay? We never did that. We just came right up into it, tested the level of resistance, and then sold off. Okay? So let's just take a look at a few things. First things first, level of resistance. So I'm going to mark this out. This is where I'd be looking for a potential trade setup. So on a lower time frame, I'm going to be looking for lower lows and lower highs to form right here at this level. All right, we'll draw a little box over it so we know that this is the candle, okay? Now, we're going to be targeting this low. Why are we targeting this low? Because we're in a bearish market. We made a high, lower low, lower high. We should now get a lower low, right? So that would be below this low. That would be breaking this low, and that's exactly what we did, right? So let's set exit. All right, and then this blue line is going to be where we want to frame our entry. Doesn't mean we're entering necessarily on the blue line, but we want to enter near or right by it after we've seen bearish price action on a lower time frame. So now let's take a look at what that looks like. So we framed it on a daily, okay? So we know this is a level of resistance, and we're targeting this low down here. This is 190 pips. So do you think that on a lower time frame there's multiple opportunities for you to get in a sell on this pair for just 20 pips, 30 pips, 40 pips, doesn't matter. Between here and here you got 190 pips. So if you catch the whole move, then basically you've gotten 190 pips. But even if you catch half the move, you got 80 pips. All right, so from a daily, we're going to drop down to an hourly time frame, and let's see what this looks like and how we would enter this trade. All right, bam. Let me get my little... These always come out so big. I don't know why. Let me fix this real quick. All right. Bear with me. All right. Why does it keep doing this? All right, so we've got our high. And on the daily time frame, we know this blue level is a level of resistance, right? Because it traded up into the daily level. And we're expecting that to hold as resistance and the market to trade lower. This blue line here is our exit. All right. So we're just going to mark it out here so you guys can see it better. All right. So here we got a high, low, lower high right here. It did make a higher low right here, but no worries because it came back up and it never broke this high. So we're going to say higher low. Sorry, lower high. High, low, lower high, lower low, right? So right here confirms, okay, we've got the break in market structure and we should want to go lower now, right? So let me show you how cool this gets. Do you see these up candles before this push down? So that is another level of resistance on an hourly time frame, right? So we've been able to break it down even more. Once it traded here, we knew, okay, we've got the break in market structure. So all we're doing is waiting for it to trade back up into a logical level of resistance. Where is that logical level of resistance? Well, it's going to be these two up candles before this push down, because this is, again, an ICT bullish order block. And notice the ICT bullish order block is on the level of the daily resistance we marked out, right? So it traded back up into that and sold off immediately. This right here is exactly where we would have been looking to enter. Where would our stop loss have gone? Right above here. And I want you guys to basically understand that there's no reason to ever rush in trading, because we're not looking to catch it up here. We wait for it to prove to us that it wants to go lower. So we had the high, then we had the low, then we had the lower high, then we had the lower low. So we said, okay, now it looks like it wants to go lower. And especially when you have big down candles like this, if it would have been like a little wick like this, then it's not as high probability. But when you have a big breakdown like this, you could tell, okay, the market structure break is now in. So we basically had two potential entries opportunities. It traded up into it here and then sold off for 40 pips. So that's a quick little setup that you could have gotten there. Or we could have been patient and we waited for our level to get hit, which came in right at daily resistance. We would have had a 30 pip stop loss and a 190 pip target. Guys, that is, you don't find that. And if you're operating on a higher time frame, you can see the big moves and then you know what's coming, right? So yeah, it traded back up. All it did was just retrace and then it finally hit the level. Let's just go back over this, make sure we're hitting everything. So we waited for the break in market structure, use fibs for retracement entries. So you're using the fib to basically give you confluence with your level and other resistance. So we know what these little circles are, so I'm going to take them off now because we don't need them. Because you guys already know that we had the break in market structure, right? So we use our fibs, and basically all we're doing is pulling our fib from the most recent high to the most recent low. So that'll be here to here, okay? The optimal levels to enter, for me at least, retracement entries, I'm looking for the 62%, the 70.5%, and the 79%. And again, these are levels that ICT has taught to me, so basically these are the only fib levels I've ever used on my charts, and they work obviously remarkably because you can see that we had the break in market structure, and then we're looking for the retracement back up, and we retraced back up right into 62, 70.5, and we just missed the 79% retracement level, but basically either here or here you had an optimal entry. Notice how it comes. So we got that, we have this level of resistance, which is an ICT bearish order block, plus we have the daily level right here. So you've got three things lining up, four plus the break in market structure. So we have four things that basically lined up and said that price wants to go lower. So how do we place our exits for the trade? Target previous levels of support and resistance on H1 and higher for optimal targets. So for us, we're looking for, like I said, you don't have to get the full 190 pips, right? So let me take the fib off because you guys know that we have the what levels we're looking for. and you can see I have first profit, target 1, which is really target 2, and then target 2, which is target 3. But look at that, how we traded up here, hit first profit, which from our entry would have been 55 pips. Then we hit second profit, 76 pips. Then third at 105 pips. And then we have our full daily objective marked out at 190 pips. So multiple opportunities that you could have gotten in for a quick 20 pips, 30 pips, 40 pips, whatever, and got out, and then just waited for another entry and then got on board again. So just to show you one more thing real quick. So we just measured out this swing, and then they had the retracement in here. Say you missed that. Draw your fib from this high to this low, map in this swing, and look at this. Retracement up into 62, 70.5, sold off. So I just want you guys to understand that if you miss this move, no problem, you can get this move. If you miss this move, you can get this move. If you miss this big move down, no problem. You can get on board here at 62. Yeah, you'll sit through a little bit of drawdown while it's consolidating, but ultimately, your stop loss would be above the swing high. About 50 pip stop loss or so. But your target would be, say you got in at 62, your target would be 128 pips. So basically 3 to 1. So let's see, let's make sure we went over everything. Use your fibs for confluence target levels, okay. So here we had our fib drawn out. So use your fibs for confluence target levels. Basically what that means is, for this pair in particular, we're looking for shorts. So we're looking for sells, right? So I'm going to be targeting each level of support as basically an exit for me. So first level of support would be this level here. I'm going to put it in blue so you could see it. This is a support level because notice it acted as support, traded higher, traded down, found support, traded higher, right? So that's going to be my first profit. And like I said, from the entry, that's about 50 pips. Okay? So I would have taken a portion of my position off, moved my stop loss now to this high, and then my next target would have been target 1. We hit target 1, took a portion off here, then basically I could have moved my stop loss even lower if I wanted to. In profit, I could have put it below this low here. So that would have been locked in 50 pips in profit. And then we hit target 1, that'd be an extra 25 pips. And then we came down and hit target 2 for an additional 30 pips. So I hope this makes sense, guys. If you have any questions or anything, just leave them in the comments below. I check all my comments, and I'll be sure to respond to you there. And also, if you haven't already, make sure to click that subscribe button and also the little bell next to the subscribe button. That'll notify you every single time I post a video, because I'm going to be posting daily and weekly analysis videos, so you're not going to want to miss that and then not know what I'm looking for if you're in the Telegram chat or something like that. I don't want to refer to something and then you not know what I'm talking about because you didn't get a chance to watch the daily technicals video. So make sure to subscribe, make sure to click the little notification bell, and also if you enjoyed this video, just make sure to leave a like on it so I know that I actually provided some value for you guys. And that's it for today's video, guys. I will see you tomorrow. Have a good one.